Hello guys, welcome back to the stock market analysis in Python course. In the previous video, we've gotten some data from NSE Pi, and that was just making use of a small Python API. In this particular video, what we're going to do is start with the financial analysis. We are going to perform a linear regression model on our historical stock data to be able to predict the stock prices for a date that's probably 2 weeks or a month from now on. We're going to start with some EDA, and here we go. So what I've done is I've just imported all the libraries that I'll be needing here. You guys can pause this for a while and import all the libraries that are here. It'll be good to watch my video on how to install libraries, and once you're done with that, you can import it. So I'm just going to start with some EDA here. Now I've downloaded the historical data from Yahoo Finance for this particular lesson. Now I'm getting data for ICICI Bank as a stock. You can just go to Yahoo Finance, you can download data from there. So here's the download option, and I've gotten a daily frequency data for the past 5 years. So 5 years is a good enough time frame for our analysis for now. Right, so I have the data here. I'm going to read it, and the file is called icici.ns.csv, and what I'm going to do is I'm going to set the index to be the date column. Now I'll quickly see what my data looks like. So why I've gotten this data from Yahoo Finance is just because it has this particular column, adjusted close. So what this adjusted close does is it adjusts your closing price for all of the stock splits or dividends, basically any of the decisions that the company has made. Now it helps to make use of adjusted close because you don't want to be comparing something that was before the stock splits with today's price. Now the stock price is maybe 100 before, and now it's just $50 because it has been split into 1:2. Now to accommodate those changes, we are going to use adjusted close. Now you can see close is a little different from adjusted close. Now this difference is pretty minor. This may be because of dividends, not stock splits necessarily, but that also accounts for quite a lot. Alright guys, so this is still around 6%. We are going to start with some EDA. We'll see what our data looks like. Now I've set the index of my data frame to be date column because this is time series data. I want to be doing all of my calculations based on that. And let us also quickly get what kind of columns we have here. So yes, as expected, all of them are float. The good part is that all of them are non-null. But what we also need to do is quickly see what the data looks like. Okay, so this is a method, and as we can see, we have open, so 1229 counts. Mean seems to be, so I'm going to be concentrating on adjusted close, so around 305. Okay, my standard deviation is quite a lot, 89 rupees. Out of 305 mean, 89 is a decent amount of deviation. Now yes, as you can see, from 156 minimum to 549 in the last 5 years. Okay, and this is after adjusting for the price, so let's hope it's been a positive trend. And 25, so my median seems to be at around $283. Now let's quickly plot this. I just want to see what the trend is like. So plt.plot, and I'm going to be plotting adjusted close. So let's see what this is. Right, so this is taking a lot of time because this is 5 years of data and it's time series. So Python's probably wondering what the x-axis will be like. Now I'm guessing the x-axis here won't have readable values, but then since it's a line chart, we'll be able to see what the trend is like, and hopefully it's a positive trend. And okay, there may be some network issues, seems to be a little slower than it actually should be, but this is what the data looks like. And I'm going to quickly take you guys through what we'll be doing here. So the whole idea of this machine learning algorithm, linear regression, is that you feed in some variables on which your target value depends. Now target value, I'm going to call it label, and our target is going to be to calculate the stock prices. Now stock prices would be adjusted close. To calculate the adjusted close for this particular stock, let's say to start with, after the next 30 days. So I want to know whether after 30 days my price is going to be you know higher than what it is now or lower than what it is now. But I also want to know what exactly my algorithm thinks it will be after 30 days. So looks like, okay, so this is adjusted close, guys. So this has already accommodated all of the stock splits and dividends, but there still seems to be a drop here. And if you guys are actually aware of the whole situation, it is 2020 May 7th, and COVID-19 has struck the markets really hard. So you can see that around a month ago or so, or probably less than, slightly more than that, 2 months or so, the prices were going up. It was an uptrend, a clear uptrend. But at around 550, when it peaked, there was the COVID impact and it just fell very sharply, went to around less than 300, and then it's now slowly going up. So this is what markets are. Now this seems to be a really interesting stock to invest in, which is why we're going to be running our algorithm. The idea again is to be able to predict adjusted close for the date 30 days down the line. And we are going to be making use of not just these things, but we're obviously going to have to play around with these numbers to come up with our own logic of how these values can affect and help us reach the adjusted close. Now I'm going to be skipping this, going to come here, and if you guys have read OHLC patterns, so open, high, low and close patterns, they're called candlestick patterns. Now you guys know that range matters a lot here, so I'm going to quickly call it range. So range is going to be my close price minus open price. So this is more like finally what was the difference between the close and the open prices. I'm going to be dividing it by open, and I'm just going to consider it to be percentages. Right, this seems fine. And so this is where we have range. I'm also going to be making use of volatility. Now volatility is just I'm going to call it the difference between volatility. I'm just going, so this is not a proper mathematical definition of volatility, guys, but this should be good enough. So this is going to be high minus low, and I think dividing by low and multiplying by 100, this was, so this is not tough math so far, but this is really helpful math. Now let's just take a quick look at what DF is now. Right, so we have open, high, low, close. What we've done here is basically, okay, so what we're doing is volatility is high minus low by low. Okay, this, now what this is going to do is this is always going to be a positive number. Now what is the volatility? All right, we might have to combine this with whether ultimately the range was positive or negative, and we're going to be emphasizing a little more on that. So we'd probably write a quick list comprehension and get that. So I'm going to be calling it candle, because so a candle can be bullish or bearish. A candle is bullish when your close price is higher than your open price, whereas it is bearish when it's the other way around. Basically, when your open price is here, but then it falls and it closes below that. Now, now algorithms don't really like strings, so they like ones and zeros. I'm just going to make use of that. Now, list comprehension. So this is going to be 0 if x is less than or equal to 0, else 1. Okay, now else 1, and I need to run my list comprehension. So what it is, okay, I'm just going to be finishing it for x in df, and I'm going to call it, so what's my open minus close? That's the range. Here you go. So this is candle. Perfect. So control X, just don't need that. Control V. Here you go. So candle is 0 when it's a bearish candle, so my close should be lower than my open. Now 283 and open is 297 clearly. So basically, when my range is negative, candle is 0. When my range is positive, candle is 1. Alright, so seems like we have our features in place. Now what we're going to also necessarily do here is drop all the NAs, because we do not want anything. Basically, classifiers cannot take NAs at all. Now Python has NaNs, not a number for NAs, but I'm just going to call this function on my data frame. Now df.drop NA in place is equal to true, and a quick look on df. Delete this. Right, so this is what I have, and my required columns are now going to be, so this is a list of all the columns that I'll now be needing, because now, as you can see, I've already made use of high, I've made use of low, I've made use of open and close, I've made use of them in range and volatility. So I do not want to make them redundant. You know, I do not want my columns to be redundant and unnecessarily increase features when they're not even needed. Now open is not going to tell me anything about what's going to happen tomorrow. It's the range, it's the volatility that may tell me what's going to happen tomorrow. Obviously, it's not a proven fact, but volume seems to play a role. Now usually when volume is really high on a day when the range goes up, it tends to show that there is heavy buying that's happening. And I'm going to wrap it up by quickly using the columns here. So adjusted close is what I'll need. I'll be needing volume. I'll also make use of range and volatility. Oops. So volatility, let's also keep candle, because I want to emphasize on whether it was a bearish day or a bullish day. So this should be it. df is equal to df required columns, and a quick look to see. Yep, so we have adjusted close, we have volume, we have range, volatility, and candle. Now what we're going to do is we're going to be shifting this whole data set by 30 days. We are going to be bringing up our adjusted close for, let's say this is 2015 May 6th. So we're going to be bringing up June 6th or June 5th for that matter. to see what the price was, and that is going to be our target price. So that is what we are going to be targeting to uh, predict. So this is it, guys. So this is the EDA and the basic exploration bit that we've done, and in the next video we are going to be running the actual linear regression algorithm. Thank you for watching this. See you in the next one.